All right. Welcome back to another episode of Chart Talk. Let's jump right into it. Again, market has definitely been a bit weak this past few months. I'm going to zoom out a little bit here. And we've just seen this, kind of weak February, March action the last couple of years. So this weekend's newsletter, I was highlighting, back in, this was 2022. We had a very painful 6 months of the market pulling in with a lot of this weakness starting in February and March. And then we had that very slow, 6 month pull in before we based out and then, rallied higher. Moving on to 2025, again, very similar price action. We were, trading at highs, market got weak. January effect kind of wears off. And then end of February rolling into March, we got a weakness and we got that very fast, bear market drop. And now this March, again, we're seeing very similar, topping action. We saw this in 2022, we saw in 2025, and we're seeing very similar price action again, and seasonally, very similar, time of year. So, we've seen how slow the market has been pretty much since October. We've been in this very tight, 5% range. 1% down days look like the world's going to end when it's, these days we're just normal price action. So we're getting very used to this really, compressed market. And once or if this 650 area breaks, then the next real line in the sand is like this 620 area, which would be a technical correction. So I don't want to get too much into a bear market like what we saw these last two times, because first we need to see a break of 650, and then we need to see a break of 620 to even get us into correction territory. Now, with all of these drops, whether they were painfully slow or extremely fast, we still got those rallies that followed. And the market does need that shakeout or breakdown to snap the market out and push it back higher. If we were just in this 2% range or 3% range pushing through 700, you get those little 1% move through 700, not the massive breakout through all-time highs that come after we get corrections or bear market. So not to say that like I can't wait for a correction, I'm looking forward to one, but looking at what we've seen seasonally the last couple of years, 2022, 2025, and what it looks like right now, it just seems like we need to expect lower price action, whether it's going to be a slow, painful pull-in or a fast one. We'll see that when the time comes, but it's just being aware of this action. This is just not the time to press it to the long side. It's just we see what's happened in the past, let the market shake itself out and wait for those better opportunities. So this has probably been like the least amount of trading I've done in many months, where I've just been passively buying the big picture, finding a swing trade here or there, but not pressing it. Have no issue sitting in cash. So moving on to just some of the strong sectors. Again, semis, continue to kind of flag out here in this, textbook bull flag up here. Again, prior resistance turning into support. So textbook stuff here. Again, the real big thing is, waiting to see what is going to happen with NVIDIA. NVIDIA has been flagging out, since beginning of summer in this 20-point range. Either this is going to be a massive stage 3 topping pattern, and you get the breakdowns that follow, which we've seen NVIDIA do in the past, kind of end of 2025, or this is just a massive bull flag for that next leg through 200 to 230 and so on and so forth. But lately it seems like this is looking a little bit more like a topping pattern where there's nothing, multiple earning beats, last 4 quarters, and NVIDIA can't go anywhere. So, a little bit of a, kind of a red flag for how long it's been consolidating here. But The sector is still holding up. It is still technically flagging until there's a break of 170 or 200. It's kind of status quo. But semis overall been somewhat strong, but just consolidating this bigger range along with NVIDIA. Again, energy has been somewhat on a tear. Trying to get rid of this. What do we got going on? Let's see. So again, the energy sector has been very strong lately with what's been going on overseas, setting up to break out through this little all-time high area. Again, you don't want to fight the strain. So very tight little flag here. Easy setup through 163 versus 161. Percent and a half risk for an all-time high breakout in a very strong sector. If you want to trade something, especially when the markets aren't the best, sometimes these are the times where I'll focus more on the sectors themselves and individual names, because you don't get as much, you're not going to get a big 5% gap down in some of these sectors. And last but not least, again, in the strong sectors, again, utilities, again, not the sector we want to see breaking out. Utilities is a flight to safety. We will get nervous, or smart money gets nervous. They climb into utility stocks. Again, we're going to pay our light bills no matter what's going on. So you don't really want to see the sector breaking out, but it's kind of giving us that clue to be cautious where, you don't really want to see textbook flag in the utility sector. So again, some sectors setting up, most of it's kind of chopping around. Again, my focus this past couple of weeks, which hasn't really came to fruition, was the flag in the healthcare sector, but we're seeing that break of support. We did not get the break through all-time highs, so it's off the radar for now. Same thing with biotechs. Both sectors were flagging out, and we could not get back to push to those highs, so kind of off the radar. Now, some of the other sectors that we've shown, a little bit different price action to what we've grown accustomed to, materials, since November, very textbook bullish breakout channel, just started to break, last week, and has continued to pull back in. And we should expect to see kind of a fade back to this retest area, in the coming weeks. We're seeing that with consumer discretionaries. Again, we were looking for that all-time high break through here. Again, did not get that. Fading back into kind of the support area of the range. We're just waiting to see how this macro area of support holds up, if there's a continued, shakeout and then climb back to highs, or breaks down lower and, big avoid. So we're really waiting on that sector. Financials, support breaking. Industrials, very close to support breaking. So pretty much since March, we haven't really seen sectors, or even, the major indexes like the Dow 30 breaking support. They all were in these very clear bullish channels. Everything was, all good in the world. Now that we're starting to see these breakdowns at support, again, these just red flags of these are signs to kind of proceed with caution. This is not the time to try to buy the dip or catch the low. Once this trend breaks, it's just stair stepping back down to, lower support area. So definitely a lot of sectors are showing us signs to kind of, wait on silence for a bit. So moving on to some names setting up. Again, Tesla, we mentioned consumer discretionaries have been a bit weak lately. Tesla kind of just basing out here. So keeping on this 420 area for that eventual move back to these, 490, 500 all-time high breakout area. So looking more for that little support buyback. SMCI has been basing out here, setting up for this move to 32 for a few months now. Again, seeing these nice higher pivot lows forming. So just kind of tightening up the risk as it continues to set up for that breakout. Keeping an eye on that. Eli Lilly, again, talking about some of the healthcare names. We want to see Lilly shake out through this support area, this 975, which it's done. last week, and now we're starting to see it getting, pretty tight here. 1,000 is acting as like short-term resistance, 975, 960 kind of acting as mini support. So you got like 2.5 to 3% risk here for this tight support buyback if there's a balance in healthcare, and then you eventually get that move, kind of back to this 120 area. So keeping a close eye on this one. And CRSP still in this big base here. Clearly can see 60 has been resistance for quite some time. Again, pulling back into support. Not really the time you want to be, the hero trying to buy it off support here. Would rather wait for this, much easier setup through 60 down the road. Again, this ASTS, we had an alert in it from about a week ago through this 89. Nice little pop, but now we're starting to see confirmed lower highs and kind of still battling with this area. So nothing at the moment, just kind of chopping around. Cisco, another one keeping on the radar through this 79.5/80 area. Very textbook, bull flag forming here. We're seeing, buyers stepping up at support. So the setups is getting a little bit tighter, and just keeping that one on the radar. Next up, we have this MELI. Again, we can see this is this prior breakout area, this 1800. And now we can see, it's currently acting a little bit as resistance, but it seems like a lot of the extreme selling pressure has started to subside, where we can see this mini base starting to form. So not really a defined setup yet, but want to keep on the radar for an eventual move through 1800 versus 1600, where, the measure move or, target is, it's like 24 to 2300 area. Amazon working on this base here. Again, still need some time through this, 215, 220 area. So let's keep an eye on Amazon. T-Mobile, this earnings flag still kind of, starting to develop, but needs some time. Got to give another few more weeks. Seeing it test support today or mini support. Again, not looking to rush into this, but want to keep on the radar for an eventual move back to like these 240 to 260 area. Some defensive names. Again, Lockheed Martin, a little extended, kind of rolling over, but we still have, GD and NOC that are flagging out nicely. For this GD, keep an eye on this 360 and then that 370 all-time high area. And then for NOC, definitely need some time, but eventually we'll see an all-time high breakout in this. You get a retest, and you'll have this like flag start to form, and eventually we should see that push through 770 in time. I mentioned before, utilities have been acting pretty strong lately. As much as we tend to avoid trading that sector because they're typically just kind of lower beta, slower moving names, this ES through 75 versus 72 still setting up, looks good. We got this GLNG, couple energy names. Again, we have highs here. We got the retest, and you have third or fourth times the charm eventually through 46. Still a little bit wide versus 43. But again, if you're looking for some energy names to take advantage of, this GLNG is setting up along with this IMO through 124 versus 120. Again, this name has gone a long way, flagged out, and potentially setting up for that next leg higher through these all-time highs. Next up, we have this TS. Again, high and tight earnings flag. Name's been on quite a run lately, starting to flag out. So keeping an eye on this 55 break when this name's ready. Similar space, we got this NE. Again, textbook earnings flag setting up through 47 versus 44. And then last name for this week's chart talk is this CRM Dow 30 name. Has been a little weak past couple months. Again, not the craziest statement to make with given some of the price action that we've seen, but nice consolidation. Very tight flag here. So you're looking to buy through 200 versus 190. And quite a ways to go before you really run into this prior pivot high around like 260. So very tight setup here. Definitely keeping a close eye on that one. So again, just recapping broadly, market has been very weak, very choppy, very back and forth. One day looks amazing. Next day looks like kind of world ending. But we can see kind of these rounded tops that we've seen around the end of February, early March, the past couple of years. And again, not expecting or saying a 20% drop is coming. But if we do see a breakthrough 650, we should welcome a correction, which will send us back to 620 and put the market in a very wide bull flag, big 80-point range, a lot of room to work with versus, these really tight, 20-point range we've been in for the past couple of months. So just be aware that could be on the horizon. If it does happen, again, these corrections typically last about a month. So I don't think this is going to take years and years to kind of come to fruition. So any questions you have for the week ahead, post them in the comments below, and I'll do my best to try to explain it.